Thank you for joining us at xm.com for this Forex Preview. We'll be looking at the Bank of England policy meeting coming up on Thursday. I'm Cristina Marujas. Joining me today is Rafi Boyajian, Senior Investment Analyst. So it's been a rather quite few days in the UK given the new Brexit extension. Now, we do have this policy meeting by the Bank of England on Thursday. The bank has been on the fence compared to other central banks around the world regarding policy easing. So do you think this time we will see the BOE loosen up its tightening bias?
Well, we have been getting a lot of signs lately. Bank of England might be getting ready to drop its tightening bias. So they have been the exception among central banks in maintaining that tightening bias, even as trade tensions have gotten worse. So even if we weren't to get an easing bias just yet, most likely we will get a more neutral tone coming out of the bank, with policymakers indicating that the next move in interest rates could be either up or down. So the UK economy is struggling at the moment. Markets have been convinced for some time now that the bank won't be able to raise interest rates, and so now we might see the MPC sort of falling more in line with market expectations.
Now, how would, and if in any way, the new Brexit extension affect the Bank of England's future policy easing?
Well, the bank is counting on a smooth Brexit to lift that Brexit uncertainty and boost business investment in the UK, which would be positive for growth. But of course, we don't know what the extent of a boost we would get if we were to get a smooth Brexit. And of course, we also have that general election coming up, so we don't know how that might change the Brexit outcome. So there's still a lot of way too many uncertainties. And even though the Brexit extension has given some respite from all the political events, the Bank of England might find itself unable to raise interest rates, even if we were to get a smooth Brexit, because the UK economy isn't just facing the impact of the Brexit uncertainty, but also from the global economic slowdown. However, we don't know whether or not the bank will be ready just yet to completely rule out a rate increase in the next year or two.
And now, turning to the pound, we saw it rally in October. It's still lingering around that area. So how could a change in policy stance by the Bank of England affect the currency?
Well, if the bank did finally drop that tightening bias and adopt a neutral and even perhaps an easing bias, definitely we're likely to see some negative reaction in the pound. However, we're not expecting any big sell-off in sterling because it remains well supported by the growing hopes that the general election will produce a decisive outcome. Still, there is some caution regarding those elections because polls in the past have gotten things wrong. And although at the moment the Conservatives are way ahead of Labour, which should give them a clear majority, there's still plenty of caution in the markets. But the other thing traders should watch out for is possible dissent in Thursday's vote, because if we were to get one or two MPC members dissenting and voting for a rate cut, that would suggest the bank is far closer to cutting rates than what markets perceive the situation to be at the moment.
Rafi, thank you for joining me today.
Thank you.
And thank you for watching this Forex Preview here at xm.com.